Hey guys, how's it going? All right, I want to do a quick video, and it's going to revisit the yen carry trade and gold. And the reason why I want to do this is I'm in a Facebook group with this one individual. I'm not going to mention his name. He is part of a silver retail firm, right? He does work for them. And the other day on Friday, I noticed that the gold prices went down like 8 bucks, and silver went down as well. And when you see gold go down more times than not, you could see the sell off in the yen versus the dollar. And basically, you see the yen carry trade in action, markets usually go higher, and gold prices go lower. And it's a jobs report. Usually, you see the yen sell off, unless if it's a horrible jobs report. The jobs report this time around, it wasn't so hot, but you still saw the same reaction. And this individual, he posted in this Facebook thread, "This is manipulation." And I'm thinking to myself, okay, you should maybe look at the yen carry trade. I just said it's the yen carry trade. That's what's in action. So some people believe that there is manipulation to the extent that Bill Murphy talks about, and whether or not these guys are right to the extent they are, you have to look at it in totality. If it is manipulated to the extent that it is, you got to look at other forces as well. You got to look at the bond market. You got to look at the currency markets as well. And you can see that there's a correlation, right? Whenever you see these markets sell off, like in the yen, you'll see gold prices most likely go down. And if you see a sell off in bonds, then you'll most likely see a sell off in gold, manipulation or not. This is how it goes together. And I wanted to show you, number one, this is what I did 3 years ago. And I wanted to show you the updated chart of the gold yen carry trade. And let me just get it out. It's not working. Okay, here it is. I don't know why I have trouble with this browser here. But anyways, I did this graph. It's from January 2012 to right about now. Where you see in blue, that's the yen, and you see in red, that's the price of gold. And you could see that there is an exact opposite relationship or a negative correlation between these two markets. So whenever I see these guys pumping up the horn on manipulation, they just look at the amount of silver contracts sold into the marketplace. In the futures markets, they talk about the paper market, but they never look at other reasons why the price may go down. And if you look at it for the last 5 years, gold prices have gone in the opposite direction of the dollar yen. It's just as simple as that. I mean, you could look at other forces as well, the bond market and whatnot. And it just surprises me. People are just going to keep on looking at the futures market, the paper market, whatnot, but they're not going to look at this easy chart to follow, the dollar yen. And people could find better entry points just looking at the yen chart. And if you want to look at it a step further, you could look at the commitment of traders report, and you could see when these guys in the paper markets, right? A lot of people talk bad about the paper markets, but a lot of these silver retailers most likely hedge in the paper markets because they're most likely the commercial money, right? Because they do this for a living. They sell gold to retailers and they have to hedge in the commercial markets, otherwise, they may go bankrupt. So if you look at the commercial money right now, they are going heavily net long the yen. So that means this blue line here, right? It's going to go down, assuming that the commercial money is right. They are accumulating a large position ever since December, and whenever you see a large concentration of yen and the market does happen to go in that direction, then you're going to most likely see yen go up, gold prices will go higher. So the blue line will go down, red's going to go up. That's how it usually works if the trend continues like we've seen for the past 5 years. And in addition to that, if you look at the commercial money for gold, they are unwinding their short positions, they're adding long positions in gold. So all this talk about intraday gold manipulation, whatnot, the bigger forces are you see the smart money now getting long the yen and starting to get long the gold. And it doesn't matter if it's an intraday move or not, because ultimately what matters is the positioning size of the commercials. That's the way, in my opinion, you could make money off of this. And then on top of it, you could get better price entry. But the retailers won't tell you that. The retailers will not tell you that they are part of the commercial money, or they're most likely part of the commercial money, naked shorting paper silver, paper gold, just to hedge their business operations. I didn't really look too much into this when I got into following gold and silver, but over the years I've picked up more and more information, and I've realized that number one, half of these guys are just trying to sell a product, or B, what they're trying to do is, or what they're doing is they're not correctly analyzing the information correctly. And I think it's a combination of both, because some people have told me, hey, these guys are con artists, this and that. But then talking to them, right, in forums and seeing how they act, they truly believe this. And they're only looking at it from one side. They're not looking at the markets from a whole. So that's where I'm coming from. I know some people will disagree with me, but when you're looking at these markets, you have to have an open mind. Whether or not you think there's manipulation, you have to look at everything. You need to look at the currency markets, the bond markets, etc. And only if you look at that, then you can realize, okay, I could get in a better entry point if I could just look at this currency pair, or if I look at the bond market, or if I look at the commitment of traders. And most of them, they don't look at it, and if they do look at it, it's not interpreted correctly. But anyways, guys, I wanted to do this quick video because I see a lot of misinformation from these guys, and just wanted to point it out. And remember, until this correlation ends, I would pay close attention to the dollar yen and also to the bond market when it comes to the gold prices, and in addition, the commitment of traders. All right? Thanks for listening. Talk to you later. Bye.